Now I'd like to welcome to the show Bryan Bashur, Director of Financial Policy at Americans for Tax Reform. Welcome to Free the Economy, Bryan.
Thank you, Richard. Really appreciate it.
All right, so there's a lot going on in the world of banking and finance these days, and when there's developments in the banking world, Congress and government regulators are never far behind. So right now, we've got kind of an ongoing fight between banks, credit card networks, and retailers, the people who run the credit cards, over how much that process should cost. Uh, Before we get to the proposed remedy, what is this underlying fight about?
Well, really, this fight is, it stems from Dodd-Frank, which was passed in 2010. And what you really have to understand that to understand what's going on right now. And what at the beginning, back in 2010, it was Senator Dick Durbin from Illinois who is pushing this policy to cap fees on transactions using debit cards and restricting the way that these transactions can be routed over debit cards. So when you go to a convenience store or grocery store or something, you buy $100 worth of a good, but only about maybe $98 of that stays with the merchant. The rest of it is a service fee for the electronic transaction. So part of that goes to the merchant's bank or credit union. Part of it goes to the network like Visa, MasterCard, Amex, Discover. And then the other part of it goes to the cardholder's bank or credit union. It's a fee for a service provided. And so in 2010, Senator Dick Durbin had this amendment called the eponymous Durbin Amendment that he attached to Dodd-Frank. It imposed price controls on debit card transactions. And he did this ostensibly to lower fees that would be, or to lower prices for consumers. However, we haven't seen that since 2010. And I would say that if this were to be applied to credit cards, then the same thing would happen. We would still not see savings passed down to consumers.
Right. So the background is, Dodd-Frank is the big financial sort of regulation and supposedly reform act that was passed in the aftermath of the Great Recession and all of that stuff that happened. So there were a lot of kind of like big structural changes to financial regulation that came through because of the Dodd-Frank Act. And this, like you pointed out, this is just sort of one much smaller part that got added to it, why it's called the Durbin Amendment to that much bigger bill.
That's right. Yeah. This and I think since that was enacted in Dodd-Frank and it was an 11th hour amendment, we haven't, again, as I said, we haven't seen savings passed down to consumers. I know there was at least one report showing that 1% of retailers passed savings down to consumers and 22% actually raised prices on consumers. So we haven't, it really, when you look at this policy, you're trying to decide, well, who is this supposed to benefit? Why are we even doing this? And it's posed as something that would benefit consumers when in reality, it's only benefiting large retailers because they don't want to have to pay a certain fee. And they're using the federal government to try and do that.
Right. So that was the background of using debit cards and regulating uh, how much retailers have to pay when they use them, accept them. Uh, so now we have something new in a similar vein called the Credit Card Competition Act. Sometimes people call it CCCA, pending in Congress. Also a Dick Durbin joint. Uh, I take it you do not approve of this new Credit Card Competition Act.
No, no. Americans for Tax Reform is very opposed. This is in a nutshell, all this bill does is empower the Federal Reserve to regulate the credit card market. There's actually nothing in this bill that actively uh, uh, authorize. Well, it doesn't. There's nothing in it that actively does anything. All it really does is it tells the Fed to go and issue regulations on these enumerated activities. The bill itself does not carry out these activities. So it's very much Congress ceding a lot of its authority to the Fed.
Right. So therefore, there's no guarantee that any consumer benefit is going to trickle down to anyone actually using any credit cards.
No, and I mean, and I think, part of it too is kind of understanding the difference between a debit card and a credit card. With credit, it's an unsecured revolving line of credit. It's a, very short-term loan. It's different than a debit card when you're just pulling money out of your checking account. And actually, and I want to read this quote to you that Senator Durbin actually read out in 20. He was on the floor when he said this. It's in the congressional record, but just really highlighting the difference. He said, "Let me give you an example. About half of the transactions that take place now using plastic are with credit cards, and there is a fee charged, usually 1 or 2% of the actual amount that is charged to the credit card. It is understandable because the credit card company is creating this means of payment. It is also running the risk of default and collection where someone does not pay off their credit card. So the fee is understandable because there's risk associated with it." Those are Dick Durbin's words.
Mm-hmm.
And he understood at the time that there is, an added uh, uh, issue with credit cards in that, this is an allocation of credit. And if you're going to clip the revenue that is charged or that is collected from these electronic transactions, then it could impact the amount of credit that's actually allocated to consumers, being that it could actually restrict the options that consumers have to access credit through credit cards.
Well, yeah, that's fascinating. The idea that 13 years ago he said, well, we need to crack down on debit cards because that's your own money, but it's fine for them to charge fees for credit cards. And now he's done a 180 and says, well, actually, we're gonna crack down on the credit card people too.
Yeah, all in the supposed name of competition. When in reality, so what the bill does is it requires credit cards to have at least two networks operate over it. And both of the networks cannot be Visa and MasterCard because the bill technically says both of the networks cannot have the two highest shares in the market. So right now that would be Visa and MasterCard. At the same time, it says that three-party models, so American Express and Discover, they operate slightly different from Visa and MasterCard. They are both the network and the issuer of the cards. So the bill exempts American Express and Discover. Discover being based in Illinois. Make of that what you will, but
Also, where Dick Durbin is from.
yes, also where Dick Durbin is from, and if this is truly about promoting competition, then why are they trying to suppress two networks and build up two others, or try and supposedly uh, promote competition within other smaller networks? It's not really logical, and the idea that giving the Fed the authority to write the regulations to carry this out is going to benefit consumers is hard to believe. And it's just there could be repercussions moving forward if it gives the Fed too much authority.
Well, yeah, I mean, I know we've got probably plenty of listeners who are Fed skeptics in in a number of ways. So they probably a lot of our friends are not excited about giving yet more authority to the Federal Reserve to do yet more stuff. Uh, but I kind of want to home in on these impacts, this sort of like consumer level impacts, because we talk about a lot here on the show about government policy and big important stuff happening in Washington D.C. But what most normal Americans want to know is, well, what does this have to do with me personally, my household, my family, my finances? So one of the most alarming to normal people potential impacts of this is, as you already sort of hinted at, one, maybe less credit in general, a contraction of like, there's fewer credit cards, lower limits, all things like that, fewer flexibility for people who want to use credit, but also the points and miles. I know a lot of our friends love the points and miles, the rewards you get for the sort of like these incremental rewards you get back from your bank when you use your credit card, like frequent flyer miles with airlines, because they're of course co-branded airline credit cards, but then just sort of points you get, the points issued by Chase has have a certain currency. The membership rewards points on American Express have a certain currency, and they all have some value down the line. And a lot of people are actually spend a lot of time and energy trying to figure out how to accumulate those rewards. What would this bill, the Credit Card Competition Act, what would that do to the points and miles game?
Would largely eliminate rewards and opportunities to get access to co-branded cards. And we know this because we saw this with debit cards after Dodd-Frank was enacted. Uh, used to have debit card rewards programs. They rarely exist anymore. Uh, there's no reason to, you know, I think I think it's very reasonable to assume that if something like this were to be enacted, that the same thing would happen with credit cards, because the reality is there is no free lunch. So these rewards are funded using the interchange fee revenue that comes from the fees on transactions. So when you swipe your card, part of that fee goes to your bank or your credit union, and that is used to fund rewards. And you can see all this in a 10K or a 10Q of a bank, of the larger banks at least, and kind of see how the comparison between expense and revenue. And so it's not free for these institutions to be able to just provide rewards. And so if you take away that the revenue that they use to fund that, then there's no incentive to keep that service going. And so it will likely go away. And, in a lot of ways, the rewards cards are like, if you have, Southwest co-branded card, American Airlines, whatever, a lot of times it, incentivizes consumers to keep spending if they want to, and gives them, a more of an opportunity to keep using the product that's offered. And so, merchants benefit from it as well. They're able to get more business out of it.
Well, yeah, I think sometimes when people think about this, they think, oh well, maybe this change will mean there won't be as many rewards, but it'll lower prices, so it'll all sort of like equal out in the end. But that is not a great assumption. One, because the rewards that people get from credit cards often require a certain amount of kind of time and energy to figure them out and use them. So the people who are willing to put a little extra time into them get asymmetrical rewards, right? Than the people who just happen to have a credit card but kind of don't pay attention to any of those opportunities. So you're paying people back for the effort they put forward. But also the assumption that if there's a price cap and the credit card people can't charge as much for their service, that somehow that money will go back to consumers, doesn't, just like with the previous case of debit card regulation, does not seem like a safe assumption, right?
No, no, not at all. And the other piece to this is the fact that networks and banks and credit unions use this revenue to improve cybersecurity and fraud protection on the cards. And over time, we've been able to see improvements in that. The most recent cards having, you've probably seen little chips on your cards. Those are EMV or EuroPay MasterCard Visa chips that are the latest privacy protections using tokenization. So basically, when you swipe or tap it, instead of it telling when it's going through authorization settlement, it's not giving out your card number, but a shell number that is different every time you swipe your card. Mm-hmm. And so that didn't used to be the status quo, but now it is due to investment in that. But the problem is that this legislation has language in it that essentially would require the industry players to expose whatever that kind of privacy protection, that proprietary information is. And so it totally disincentivizes any investment in new cybersecurity, which arguably for a lot of people is the most important, I think, benefit that comes with these cards. And so if people want their personally identifiable information secured, they need to understand that a lot of the fees that are charged for this service go to that. There's no other way to fund it. And if that revenue did go away, then there would be the industry players would have to find a different way to fund that, and that could result in higher fees on checking accounts, or maybe higher minimums on accounts, things like that. So you're going to see costs go up elsewhere. That's just a logical thing to happen. So it's there's no free lunch.
So obviously, banks and credit card processors are not in favor of a new proposal like this, and we've gone through plenty of reasons why most consumers would not be in favor of it. Who is in favor of it
The
besides
folks,
Dick Durbin, the sponsor?
large retailers like Walmart, Target, Kroger, folks like that are using. They want to be able to use, at least one example I can think of is Target Red. They have a they want to be able to basically cut out the middleman and be able to have everybody use their product where you can just
They have
take.
their own credit card.
Right, right. So they want to be able to, but they're using, and there's nothing wrong with them being able to want to innovate that way. I think the problem is that they're trying to use the federal government to carve to basically promote their product and carve out other competition, and that is the problem. And I think from a free market conservative perspective, that's just really not in line with our principles, and so that's why we have a huge issue with it at the end of the day. And there has been attempts to take legal action. And there was a big U.S. Supreme Court case, Ohio v. American Express, and American Express ended up winning that. The Supreme Court sided with American Express, basically saying that there were certain provisions in contracts that Amex had with their retail partners, saying that you can't tell consumers to not use our cards because they charge a higher fee. And it was Clarence Thomas that wrote the affirming ruling, and he basically said that they did not find any while prices may have been going up, these were not out of line. These were definitely in line with the rest of industry, and there was no restriction in output. So there is no anti-competitive behavior here. So if people are trying to argue, oh well, there's too much concentration in the market, we're just not really seeing that. We're not seeing consumers lose access to products or lose access to output. We're actually seeing more and more opportunities for that. So just to say that there's anti-competitive behavior is just totally inaccurate.
Well, yeah, I know. Like you said, we have seen some restrictions on offers that banks used to give on debit cards because of this price restrictions that went into effect over 10 years ago. But I feel like the credit card market has never been more vibrant and diverse. There's tons of banks offering lots of credit card products of all different kinds, including ones some that have annual fees and offer credits and discounts to go along with them. Some that have no annual fees. Some that offer points that you can redeem. Some offer direct cash back. They have There are cards where they have high percentages on cashback that rotate by month or by quarter. There are ones where you get to pick which category you get the most cash back in. Banks seem to me to be bending over backwards to offer as many different products as possible, attracting customers in all sorts of different ways, sign up bonuses and discounts and rebates and rewards of all kinds. That this is one of the last industries where you would argue, a tiny handful of players are making things bad for consumers.
Yeah, no, you're exactly right. And again, it begs the question: so why is this legislation necessary? Who is actually benefiting from this? And it's the large retailers. It puts power into their hands to be able to choose between different networks. And the idea is that they would then choose the lower cost network, which probably invests less in fraud protection, probably doesn't have as many opportunities for rewards, things like that. And so while it benefits them, how is it actually benefiting the consumer? And that's what we're most concerned about.
Well, yeah, and you pointed out from the perspective of, Americans for Tax Reform, which is, sort of conservative small government organization. It's, this approach is not consistent with your organization's values, but I don't think it has to be confined to that at all. I think that it doesn't matter if you're a conservative or a free market warrior, or you're a progressive, or you're a, new variant Marxist Leninist. Like, no one should like the federal government manipulating consumer options and have it be a giveaway to a handful of big retailers, right? I don't think anyone should really be in favor of that, right? So it's not just the like we're the hardcore, free market advocates out here.
Well, I mean, look at the collapse of Silicon Valley Bank and what's happened with inflation. I think we saw the Biden administration spend billions to trillions of dollars that led to a lot of the inflation that we saw, which then forced the Fed. Well, the Fed basically was calling it transitory inflation. Wasn't actually going to result in anything. Then we see they have to hike interest rates to record highs, and then all of a sudden, the bond portfolios on Silicon Valley Bank and others are devalued by billions of dollars. So the Fed really bungled a lot of the things that have happened in the past 1 or 2 years in the American economy. So why, looking at all of that, why then would elected officials want to give more authority to the Fed to write regulations to decide how the credit card market should function in the United States? It's not very logical. I don't, if they haven't been performing well, why would we give them more authority?
Well, yeah, and I think it's also kind of a weird cultural moment going on here, where the the American public sometimes has different opinions on different big industries and corporate types, over time. Sometimes there's, the banks are really in the doghouse and have, bad low public approval, and sometimes other companies more popular. But is it just sort of a cynical ploy on the part of people like Durbin and the people who are supporting this to sort of like advantage one industry and disadvantage the other? Or is there some sort of, do they think there's some sort of underlying thing where uh Americans hate credit card companies, but they like somehow love Target? They're like, yeah, screw over the credit card companies because everyone thinks Target is so great and should be more profitable.
I think there's a populist sentiment that comes with this. I think there's a lot of rhetoric saying, "Oh, we're going after Wall Street when we do this." The big greedy banks, or the big powerful Visa and Mastercard. We're trying to crack down on Wall Street. When in reality, there are all small community banks and credit unions that are far smaller than any bank on Wall Street are opposed to this legislation. And they're opposed to it because they've seen, since the Durbin Amendment and Dodd-Frank, they've seen their revenue go down, and they don't want to see the same thing happen with credit cards. And one difference between the Wall Street banks and a community bank or a credit union is the different areas where they can collect revenue. A community bank or a credit union does not have access to capital markets a lot of the time, and they don't have access to these other revenue sources that an investment bank does. And so when you take away this one source of revenue from them, it's a huge burden on them. And this is going to it could potentially force more consolidation among smaller banks, which is ironically something that a lot of the Dems have been a lot of the Dems and some Republicans have been also opposed to. So they're kind of, you're stuck between so we have Sherrod Brown and others who don't want to see banks merge at all. But then on the flip side, they want to impose costs on them that are going to force them to merge because they can't comply with the costs that are going to come with this new legislation. So they're stuck between a rock and a hard place. So what do? All you're doing is degrading our banking sector. And there's no way that consumers are going to come out of that better off.
All right. Well, the question now is, where is this in the legislative process? So it's been introduced. It's got a prominent sponsor in Dick Durbin of Illinois in the Senate. What is the 411 on where it's going from here?
So they attempted to attach it to the National Defense Authorization Act, which is the annual defense bill that helps fund U.S. armed forces. They failed at doing that. So, I think the only way that this gets through is on some sort of omnibus vehicle, whether that be a big appropriations package or they try and get it onto the farm bill or something that is called a quote must pass vehicle, something that is a large authorization or appropriations vehicle that Congress has to pass in order to keep a lot of the functioning arms of the government going. Our task is going to be making sure that that doesn't happen. It's not good policy. It's not germane to a lot of these large packages. So, at the moment, it's hard to say where this will go. I think, there were some media reports saying that Roger Marshall was assured that there would be a vote on this before the end of the Congress, meaning before the end of 2024. That's a pretty vague assurance, so I'm not really sure what that'll actually result in. But this is one of those issues you just have to keep reminding people about and keep educating people about because it's more of an esoteric issue, but it really impacts anybody who has a credit card, and so it's which is I think one stat I saw was maybe 80. It was about 80%, I think, of Americans have a credit card. But yeah, I mean, and in the House, so there is a companion bill in the House. And the main sponsors of that are Lance Gooden from Texas and Zoe Lofgren from California. And, I think that there's less opportunity for this to go through the House because I know Patrick McHenry is a staunch opponent to this legislation, and he's been great on this. And I know that there are a lot of Republicans that are good on this legislation, but I think we just have to keep reminding people really what the true impacts are on consumers, which is going to be less services, less opportunities for rewards, and declines in fraud protection.
Right. So if anyone listening right now is concerned about keeping those no free credit cards and their points and rewards, by all means, do not let us stop you from calling up your member of Congress and yelling at them about the Credit Card Competition Act.
Yeah, it's one of those bills that may not be at the front of everybody's minds, but it's extremely important, and we don't want another situation with the Durbin Amendment where it was slipped into some large package, and all of a sudden, we're seeing limits in what's offered to consumers. Again, after the Durbin Amendment, we don't see any more debit card rewards programs. We just don't want to see the same thing with credit cards.
Those members of Congress, they're so sneaky. They are sneaking around all the time.
They really are. Oh, and I do want to mention one other thing. There's another piece to this that's been some rhetoric has been coming from supporters of the bill saying that we need to do this because of something regarding so what's called a merchant category code. It's basically a 4-digit code that's applied to every type of merchant or purchase you could have. So like each airline there's a certain code that's applied to that, and that's basically used so that rewards can be allocated appropriately. And there was a push by a union-backed bank called Amalgamated Bank to force this international organization to pressure networks to adopt specific codes for firearm retailers. Mm-hmm. Because there are some on the left that want to see the government track gun purchases, which is hugely problematic. Now, the networks are not implementing this at the moment, but the problem is that some folks on the right and the left have said, "Oh, well, this bill, we're trying to get this bill through because we want to solve that problem." Well, the problem with that is that this bill does nothing to solve that. This bill has not, while the industry players are the same, uh, this is a totally different issue. And there have been state bills. One I can think of was passed in Florida that do actually get at the problem of tracking firearm sales. So there is legislation that's been passed, but this bill is not one of them. So I think that there's opportunities for Congress to prohibit financial institutions or the federal government from tracking gun sales, but that would need to be totally different legislation. The Credit Card Competition Act does not resolve that at all. All this bill is a totally rent-seeking legislation to benefit large retailers.
Here, here. All right. Thank you, Bryan. Tell us now, where can we find you and more information on ATR?
So you can, our website is atr.org, or you can also go to saveourpoints.org. There's a lot of information on there dedicated to understanding what the Credit Card Competition Act is, how detrimental it is to consumers, and what we need to do to keep fighting it. So thank you, Richard. I really appreciate it.
All right. Thanks. We'll talk to you later.